All right, ladies and gentlemen, hello. My name is Darius Anucauskas, and I'm the Chief Market Analyst here at Markets.com. And today is Tuesday, ladies and gentlemen, the 23rd of September 2025. Look, I wanted to do a quick little video on gold because it has become once again, a hot topic, and everybody's talking about it because it's surging. We'll dig into what's happening right now with gold and in general, what can we expect. But before we do that, as always, let's quickly have a read through our risk disclaimer. So yes, the content we produce does not constitute investment advice or investment recommendation and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. I'll give you a few seconds to read the rest. I'm not going to disappear anywhere. So yes, gold is once again hitting the wires. It seems like quietly because geopolitics right now is the main topic, but still, we're all watching that carefully. And geopolitics is one of the issues, of course, for gold surge. But I'll talk about that more. Look, before we jump any further, also just a quick mentioning of our Markets.com website, which you can always check out for more information about us. If you have any questions, reach out to us. We'll be more than happy to assist. Also, I'm doing a webinar today, so the 23rd of September. So if you are watching this one still and we still have time before that webinar, so yes, please register, tune in. Hopefully you'll enjoy it, and it's on the RSI indicator. Again, for those who maybe don't know much about it, it's a perfect webinar just to see how well it's performing in general, because what I'm going to do, I'm going to look at historic data, and also I'm going to look at the I'm going to apply it in real life market action on our demo account so that we would know, how actually, and we will place some trades on our demo account, like I said, but we'll see, in how actually can we position ourselves with the help of RSI, and if in general, if it's any good or not. So, ladies and gentlemen, let's have a look what's happening here. Gold, yes, looking at the picture here, the spot price is rallying 3,700, and we're hitting new all-time highs as we speak, as I'm recording this video. We hit the 3,785 already, so we did retrace slightly. If I just check out the 1 minute chart, there we go. We were just a few minutes ago from hitting the all-time high. Let's see if we can go for another one. And it seems for now, it seems that there could be some more upside to come on gold, especially looking at this daily chart. You can see my upper side of the Bollinger Band is still here. So in a way, I'm not saying that it's it will reach it, but it's one of the options here, of course, to consider. Certainly, everybody's talking now about the 4,000. That's something that I've mentioned in my webinars, in my Markets Talk webinar as well. Of course, we still have a path to go towards that 4,000, but we still have the beautiful obstacles like 3,800, 3,900, and then only we have the 4,000. So let's not get ahead of ourselves. Let's not get way too greedy. Let's go slowly on this. But of course, certainly right now at the moment, everything is kind of working in favor of gold. And a few months ago, I also talked about it because look, we were rallying here like crazy here at around the end of April. And if you remember April time, we saw the stock market kind of collapsing in a way. This was in the beginning of April. Then we started recovering. I think that the market started recovering because with the tariffs, we took pauses. The White House administration kind of gave provided the pause, like a 60-day pause, like a 30-day pause for those tariffs, for the deals to be done. And this is where there was so much uncertainty in the world that nobody knew what to do. Everybody was just like, well, let's just buy gold. And this is what happened. And this is what I said to everybody. Look, yes, that's in a way great. Yes, this is a fear index in a way as well, like the same as VIX here, which is also a fear indicator. But with the situation with gold, yes, everybody's buying. We have geopolitical problems, Europe, kind of the Middle East, western part of the Middle East, and also, of course, we have those central banks. The big the big reason is that the Federal Reserve is planning to go for more cuts. As we know, we were currently expecting. Let me just refresh this very quickly. We're expecting two cuts by the end of the year. We are in the October meeting. We're expecting another cut, and then December meeting, we're also expecting another cut here. So basically, two cuts by the end of this year, and this, of course, gives gold the opportunity to rise because again, investors are then pouring money into something like safer, right? Like gold, like silver, and certainly because again, you don't put money in the bank because why would you? If you're not getting a good deal of a good interest rate, it's a good time to take out a loan, of course, and that's where the whole point of the lowering interest rates, so that in order to kind of boost the economy. However, I think that we're going to be in terms of touching a little bit on the Federal Reserve. It's going to be an interesting moment if they're going to continue cutting rates. On one hand, that is seen as a positive for the stock market because again, lending becomes cheaper. The only thing is that markets might start worrying a little bit just because, well, it's if you're cutting again so quickly, then the question, why are you doing this? I mean, are you afraid that there could be issues later on? And certainly the market isn't stupid. They also understand that inflation might pick up, which right now it seems like not the most important thing for the Fed. Labor market is more important right now, so they're trying. It's kind of trying to do a quick, easy fix without any consideration of further negative implications. And you're trying to save this labor market. You're trying to create these jobs in a way, or should I say, you were trying to make the lending cheaper for companies so that those could in a way start maybe acquiring more labor force. However, I talked about this in one of my Markets Talk webinars that, look, there's an issue. I think that given that everybody's major big companies, like all your tech giants, are currently investing into AI, this means that what's happening is that you're actually removing the entry level, like those basic skill jobs in a way, because AI is going to take over that, and that's where you're kind of actually creating more issues. So in a way, if your tech is the one that recruits a lot of people, and you're suddenly giving them cheaper lending, they're taking that money, they're taking those funds. But the thing is that they then put those funds into creation of more like AI tools, your automation and everything. So I don't know. It's a very big debate in terms of like you're questioning the idea of actually how are you actually helping with cheaper lending at this point in time. So we'll see. Of course, time will tell if it's right or wrong. But certainly at the moment, these are the thoughts that is running in the heads. And I think that partially market does understand that. That the market does understand that there are issues, and we're worried. Markets are worried, and central banks are worried about what's going to happen next. I mean, yes, they are the ones that are doing the rates, but so at the same time they're also worried. It's like a stick with two ends, and on one hand you're the one who's in charge of that lending, but you understand that your lending might cause some issues. So, but you're still doing it. So, because again, on one side, you cannot really not do it because you get pressured. You get pressured, as we saw. The governments do put pressure on central banks. Now, anyway, coming back to the topic of gold, as we speak, look at this. I mean, 3,790 we already did, as we talked, and we hit a new all-time historic all-time high, 3,791 even. So 3,800 is not really that far, and I think that it could be quite doable today, if not higher. So looking at this from the technical perspective, now let me bring in my RSI and MACD, and you can see that so far the momentum is to the upside. And yes, we're on the RSI where it seems like we're approaching these overbought territories. However, we're not seeing a reversal yet. So in a way, it could still drift further north. Same story on the daily chart here on the MACD. There is still, potential for some upside. Now, if we remove this, can I remove the noise a little bit from the indicators? Look, this here played out wonderfully, right? I mean, we had a triangle pattern. If you remember, I talked about this at the end of July. I said that look, we could be forming something of an ascending triangle pattern, and the breakout here is to the upside. There we go, pure beautiful technical setup here, and it worked out. Now the question is, how far can this travel? So at this point, we can apply our Fibonacci extension, and the Fibonacci extension, of course, it will be a little bit, I would say, subjective, because it depends on from where you draw it. If you draw it this way, that way, there we go. So, let me just change the colors here a little bit. Yes, this is what I'm gonna do now. And yep, so there we go. So also this here. Yeah, let's for now let's do it this way. I probably should have maybe changed the colors here a little bit. Yeah, I think that's that. Yeah, you know what? Anyway, I'll change. You got the picture. We'll change that later. But what I'm looking at here is, yes, if we're drawing it this way, from the lowest point of November of 2024 to the highest point of April of 2025, and then to the lowest point of May of 2025, then you get something like this. Does it look very nice? No, not really. But then if I draw it from this kind of drop of the year, the lowest point of April, which was quite a significant drop this year. So the lowest point of April, highest point of April, then the lowest point of May, then you get something like this. We're surpassing levels, and the 4,000 becomes this exact level which everybody's talking about now. On the Fibonacci extension, and that's at 1.618 level here. So look, the 161.80%, if you wish. That's the, like I said, the psychological beautiful target then on the 4,000. Let me just zoom out here. This is what we're aiming for. This is what we're going to be looking at. Of course, I do like levels in between these key important other levels on the Fibonacci extension, so where the little slowdown could happen. And look at this, the upper side of the Bollinger Band just it sits exactly around this midpoint between the 100% and 161.8%. So it sits around the 3,816, 17. You can route it up to 20, doesn't matter, it's just the area. It's never the exact levels of the area what we're looking at. So this is what we could be keeping an eye on, the 3,820 zone, something ish, plus minus. And this is what, like I said, this is where we could aim for now. And then we could see like a little bit of a slowdown, and then we'll have to see if it actually continues or not. But the 4,000, of course, becomes on everybody's head. If you remember, we were talking about 3,000, and then we're like, wow, I mean, 3,000, that's like crazy. And look at this, we're now like almost 4,000. So in general, let me just get rid of the Fibonacci for now. In general, this year, if we measure how much we have performed and how we have performed this year and how gold has performed this year, let me just grab it from the January of this year. So from here, all the way. Let me just adjust this. Let me see if this is okay or not. Yes, this is where January started off. This is where we are right now. I mean, look at this gain. We're going for the 50%. Where will be the 50%? Let's have a look. Where is the 50%? 50% is around 3,900 something. So right now, if we do go for that 3,820 zone, that's roughly around the 45%, just a little bit above that. 45% gain this year only on gold. I mean, talk about craziness. Okay, if I jump into history a little bit, and if I look at the, let's say these rallies, these major rallies, like this, to me, this looks parabolic. This is just, like I said, insane. I mean, look at this, the steepness of this rally. We did have similar things, and this is where we ended up being. It did sell off. Look at this. Look at this moment here back in 1980. Crazy move to the upside. Look at this, from 1976 all the way to, what was the year here, 1979. We were rallying like crazy. We did 770%. I mean, that was and then we sold off, and it fell off the cliff. It then started drifting lower. Gold was not interesting, but there were some issues. Certainly, then we had this moment in our history as well. This is where it rallied, the subprime crisis. We drastically rallied to the upside here. This is when the stock market was collapsed. It was good. It was all fantastic in a way, but then it collapsed. And then look, we rallied after that. After we started going into recovery for another like 3 years, we were rallying like crazy, right? 180%. So that's another decent move, and then we corrected back down. Now, looking at this picture, we're also rallying again. Well, if we're taking this from 2022, another 3 years almost. Yep, there we go. Actually, bang on 3 years. So another 3 years now we're doing. So here we have like 2008 and 2011, all around 3 years. Then we also had this moment here from 1976 September till yes, 1988. A little bit more than 3 years, 3.5 years, 3.4 years, something like that, and 3 years and 4 months. Sorry, and it's like every 3 year, like we have these rallies for 3 years, and then we collapse. I'm not saying that gold is gonna collapse or something like that, but what I'm saying is that when things like that happen, you have to look at history as well. You need to kind of take into consideration parabolic moves do not happen, like they do not continue happening and like going. What's the point of buying something which is overextended? Even Bitcoin, remember, right? I mean, yes, people still see value in it, but when it goes up, it has to go down sharply. Sharp rise, sharp fall. And another thing which I mentioned before in my previous videos as well, that look, right now the stock market is rallying. Everybody's happy. Everything looks nice and dandy. But again, this will fall as well. And gold right now is rallying together with the stock market. But once basically everybody starts understanding that the stock market will be reversing lower, you will see selling in gold, in my opinion, because let's face it, governments need and central banks need money to support the economy, right? If you know that there's going to be like something boiling up and there could be a major crash, you're going to sell off some of your gold because you need cash. Cash is king, because you will not be able to, you need to support your economy then with with the funds. You will need to provide money to the people so that there wouldn't be like a catastrophe or anything like that. So you will liquidate on something that you have in your reserves, and that's gold. So because again, it might cause a correction, and again, a correction wouldn't be a bad thing. Why? Because then you could, after a few years, you could pile up on that gold again, and just do the whole thing again, because that's what's happening so far, right? So ladies and gentlemen, like I said, keep your eyes on this. It's a very interesting moment that we're going through, and keep an eye on that because, again, like I said, history does repeat itself. Let's see if it's going to repeat itself this time. Ladies and gentlemen, thank you very much for watching and listening. I'll have to wrap it up here. I already did the video for maybe for too long, but hey, look, I tried to explain everything what I thought. I just tried to share with you my thoughts. Let me know in the comments what you think, if you agree or not. But hey, hopefully you like this video. Don't forget to like and subscribe. As always, yes, please do share as well if you need to. But hey, thank you very much, and I'll see you next time in my next little video update. Bye for now.